Let me start with the conclusion right away. Tesla's Q4 was not about deliveries, discounts, or short-term stock moves. Q4 was the quarter when the market quietly changed how it values Tesla. If Q4 felt confusing to you, if the news felt inconsistent or even contradictory, that's not because Tesla lost direction. It's because the evaluation framework changed, and most people were still looking through the old lens. Hi, this is Ken. In this video, I want to help you see Tesla the way the market is starting to see it, not as a car company reacting to quarterly demand, but as an AI company being tested in the real world. By the end of this video, you'll understand why negative headlines didn't break Tesla's valuation, what actually mattered in Q4, and what long-term investors should be watching going forward instead of getting distracted by short-term noise. Let's quickly summarize what happened on the surface. We saw price cuts. We saw weaker delivery numbers in parts of Europe. We saw regulatory discussions and investigations around FSD. Normally, for an automaker, that combination would be a serious problem. And yet, Tesla's stock didn't collapse. In some moments, valuation was even defended or re-rated upward. For many investors, that felt strange, almost like the market was ignoring reality. But the market wasn't ignoring reality. It was prioritizing a different one. The key issue in Q4 wasn't Tesla's execution, it was our evaluation axis. For years, Tesla was judged primarily as an automaker. Deliveries, margins, growth rates, those were the core metrics. So when discounts appeared, the natural reaction was, is demand weakening? When deliveries slowed, the question became, is growth stalling? Those questions make sense if Tesla is only a car company. But during Q4, the market started shifting away from that framework. What investors increasingly focused on wasn't how many EVs Tesla sold this quarter. It was whether Tesla's AI can operate safely, reliably, and autonomously in the real world. That's a fundamentally different question. And once that shift happens, quarterly delivery fluctuations lose some of their power. Now, let's zoom out and look at Tesla's strategy across Q4. October was the signaling phase. Tesla made it clear through language, positioning, and product direction that cars are becoming AI nodes, not just vehicles. At that point, many people still saw it as an interesting future narrative. Then came November. November was when execution became visible. FSD improvements, especially in North America, were no longer about convenience. They were about reducing human intervention in complex, unpredictable environments. That's not meaningful progress unless you're thinking about Robotaxi. Tesla wasn't just improving a feature, it was validating a system. And this is where the story really starts to change. This brings us to December, the most misunderstood part of Q4. December was full of headlines that, on the surface, looked negative. More price adjustments, Europe delivery concerns, regulatory noise around FSD. For a traditional automaker, this would normally trigger a valuation reset, but that didn't happen. And here's why. By December, the market was no longer asking, how many cars did Tesla sell this month? Instead, it was asking, where will Tesla's future cash flows come from? Robotaxi is not a one-time sales model, it's an operational model. A single vehicle doesn't just get sold once, it operates daily. It generates revenue over years. Once investors start modeling Tesla this way, short-term delivery volatility becomes less important. December didn't look strong on the surface, but structurally, Tesla had already moved past the point where those headlines dominate valuation. Now, here's an unexpected moment from late December that didn't get much attention. There was a large-scale power outage in San Francisco. During that outage, Waymo's autonomous services were forced to shut down. At the same time, Tesla vehicles running FSD continued driving normally in the same city. This isn't about which system is better. It's about design philosophy. Most autonomous systems rely heavily on high-definition maps, constant connectivity, and stable infrastructure. They perform best in a perfectly organized world. Tesla's FSD is built differently. It's designed to interpret the environment visually, moment by moment, even when signals fail or conditions degrade. In other words, it's designed for a messy world. That power outage quietly highlighted something important for investors. Autonomy that works only in ideal conditions doesn't scale well. Autonomy that survives chaos does. That distinction matters more than flashy demos. Looking forward, Q4 wasn't about announcing Robotaxi, it was about proving readiness. FSD is approaching a point where passengers stop thinking about it as AI driving. That psychological shift is critical. At the same time, Tesla isn't relying on software alone. They're addressing real-world limitations through hardware, manufacturing, and system-level integration. This combination, AI, hardware, and mass production, is extremely difficult to replicate. Regionally, Tesla is also being strategic. In Europe, the focus is on practical utility in less dense areas. In China, preparations are happening quietly, without loud announcements. That pattern suggests rollout is closer than many expect, but not uniform. So, how should long-term investors interpret Q4? Tesla didn't lose momentum. It transitioned phases. Q4 marked the shift from being a company that talks about the future to one that is being tested by reality. That's why the news felt inconsistent. The evaluation rules changed mid-quarter. Going forward, the most important signals won't be delivery headlines. They'll be signs of autonomy, reliability, regulatory adaptation, and operational scale. If you still view Tesla primarily as a car company, Q4 probably felt disappointing. If you view Tesla as a real-world AI platform, Q4 was quietly constructive. Before we wrap up, let me leave you with one question. When you look at Tesla today, are you seeing a company selling cars or a company training AI to operate in the real world? That single perspective shift changes how every future headline looks. If this analysis helped you see Q4 more clearly, feel free to leave a like. And if you want consistent, long-term focused Tesla analysis beyond daily noise, consider subscribing. Thanks for watching, and I'll see you in the next one. Before we wrap up, let me take a moment to introduce myself. I drive a Tesla Model Y, and at home, I've installed a Tesla Powerwall, so I actually charge my car with solar energy. I truly believe Tesla is shaping the future, and that's why I share the latest news and insights here on this channel. I'm from Japan, but I want to connect with Tesla fans all around the world. That's why I also create an English version of my videos. YouTube now lets you switch the audio into your own language, so you can enjoy it in whatever language you prefer. Most of all, I'd love to connect with Tesla fans everywhere so we can support Tesla together. I also share updates on X, so feel free to follow me there and let's connect. And if you haven't already, please subscribe to this channel. I'd really appreciate it. Thanks for watching, and I'll see you in the next video.